this is an interesting company because we looked at it in 2015 and it was growing at a ridiculous pace every quarter, about 115% growth in terms of its smartphone shipments. It had an extremely tough 2016. It seemed to lose a lot of focus, and it's now bounced back in 2017. It's managed to grow continue to grow its smartphone shipments, and just this last quarter that's gone, the first Q, its smartphone shipments globally were up about 87% versus an overall decline in the global market of 2.9%. So they seem to be continuing to grow despite some of these headwinds, and I think that's a lot down to the way they price their phones. I mean, their most expensive phone in the market is at about $640 versus, of course, we know some of the higher priced phones from competitors like Samsung, like Apple as well, which have struggled in the Chinese market. And so that's how it's continued to grow. But also, Xiaomi's actually pledged not to make more than 5% net profit margins on hardware, and actually said our business really is about services. So you can see a lot of parallels with the Apple story here. Xiaomi believes that if it can get products into the hands of the consumers, not just its smartphones, but many of the other products it makes in the smart home category, perhaps its smart speaker and TVs, etc., then it believes that it can unify these products into a platform where it can sell its services. Of course, some of the risks around that, as we know, are that the hardware sales do slow. It doesn't manage to get a lot of users onto those services, and that could be a big risk for the company going forward as it continues to try to grow.
Yeah, I mean, this is fascinating, isn't it? So what are they saying here? They're going to raise about 10 billion. That's the speculation.
That's the speculation.
Valued the business then at about 100 billion. But the first blush of earnings we get to look at here, the company reported a net loss last year of $6.9 billion. A profit, excluding the charges, the one-time charges, was 5.36 billion won. I mean, it's not exactly making much money, is it?
No, I know, and that's the problem. They're working on razor-thin margins here, and I think the risk is that that could turn off investors. I was reading through the prospectus this morning, and a lot of the focus is on this services business. They have a music streaming service. They offer a lot of games. They are trying to build this whole ecosystem of products around the hardware. Of course, we know that the risks of that not coming off it could be quite high. Consumers aren't willing to pay for these services if they're not willing to continue to use the platform. I mean, Xiaomi said it had about 190 million users on its operating system, which isn't and using its services, which isn't a massive amount of users, and that will need to substantially grow in order to justify the valuation that it's seeking in the market here.
Yeah.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.